I'm going to show you guys exactly how to find intraday bias using ICT concepts. I'm going to show you how to frame lower time frame setups, what levels to target, and where to put your stop loss at. I think it's best to explain some of the trades that I took today and yesterday and how I framed intraday bias on those setups. I did come with receipts as well because I did post them in my Discord beforehand. So framing intraday bias, right, I'm not always going with the direction of the daily bias. Now, if the daily time frame is suggesting for higher prices, the best thing to do is really be on side with that. But in retracements, right, what happens if price does a large retracement down and you're just trying to long every single one of these days, where you're going to get offside a lot. So I'll kind of show you guys the process that I go about to find intraday bias pretty much every day on the S&P 500 and ES. On the daily time frame, really what I'm doing is marking out levels of liquidity that I think are interesting. So we have this swing high right here that price went up and took out, and then we have this high here as well. These are both levels of buy side that I would mark out. We also do have this sell side liquidity down here, right? So I'm just marking out liquidity on a higher time frame just because that's significant to me. But as we're in this chop right in here, right, I'm not really referring to PD arrays as much because it's just moving back and forth. So now I'm going down to a 4-hour chart. You can see that we do have the liquidity lower. We have these relative equal lows. So I'd mark out these 4-hour lows. We have relative equal lows below, but then we have 4-hour relative equal highs above. So if I'm trading an expansion model, meaning I'm anticipating for higher prices and I'm looking for it to continue higher, and we have engineered liquidity on both sides of the market, this would be a condition I would just sit out in. But there is ways to frame intraday bias, which we're going to dive into right now. So on the 4-hour, it's taking out the buy side liquidity. I'm going to scale down into a lower time frame now. What happened after it took out that buy side liquidity? There's two questions I like to ask myself. Where is price delivering from, and which PD arrays are being respected? And we're going to dive more into that right now. So price takes out the buy side liquidity, and what does it do? It displaces down with speed. So when I see this, let's say I'm watching price when it's right around this area right here. Let's say I'm watching price around this blue area, and it's just kind of consolidating in here. Well, I would ask myself, which PD arrays are being respected, and where is price delivering from? So it's delivering from the buy side. What do you mean, Dan? It's delivering from the buy side? Well, I mean, it took out the buy stops and it just delivered down. It went down after that. So that's when I say it's delivering from buy side. What's likely next to happen if it's delivering from buy side and it's disrespecting bullish PD arrays? Well, it's likely to head for the opposing liquidity. So scaling down to a 15-minute time frame in here, we took out that 4-hour buy side liquidity. I'm looking to the left side of the chart in here, and I'm looking to see if bullish PD arrays are being respected or if it's disrespecting them. So if you notice, we have a bullish breaker over here. So we have a low, high, lower low, higher high. The consecutive up close candles as price is making this high is going to be the bullish breaker, right? The last up close candle is the sweet spot of that breaker. So this would be the sweet spot of the breaker. And you can see that price just displaces straight past that with speed down. Notice we have this big displacement past that breaker. This entire up range move, this would be the breaker in here because it's the consecutive up close candles before price makes the high, then the low, then the higher high. So this will be the real breaker. The high is the sweet spot of that. Notice how price just cuts through that and closes beneath it down here. So focus on this 9:15 Monday candle. This is where we're going to zoom in here, and I'm going to show you guys how I framed a lower time frame trade, and I also showed Discord members beforehand why we're expecting lower prices. So it disrespects a bullish breaker. We have a bullish fair value gap and a discount of the range. What did it do? It just displaced straight past that. So notice how we're closing beneath the bullish PD arrays on the left side of the chart. But then if you look at the order flow, as price is continuing down, up close candles are acting as resistance. Price is pulling up to bearish order blocks. It's respecting them, and then price is trading lower. It's returning back up to bearish fair value gaps. It's respecting them and trading lower. Order flow is clearly bearish here. We're delivering from the buy side. It's disrespecting bullish PD arrays, and it's respecting bearish PD arrays. So when I see price in here, right, if I'm looking at this in the New York session, I'm going to mark out the liquidity below. Why am I marking out this liquidity? Well, because it's proving to us that order flow is bearish. And if order flow is bearish by delivering from buy side, disrespecting the bullish PD arrays, respecting the bearish PD arrays, it indicates smart money short, and they're going to want to take price to an old low. So smart money short up here, right, they need to take price beneath an old low because below old lows, ICT talks about, it's sell stops. So retail is going to have sell stops below old lows. So smart money short, they're going to need to trigger those sell stops so they can buy back at a lower price. That's exactly what happens on Monday. This was around the end of the AM session kill zone. Now, some of you guys may be thinking, what the heck's a PD array? A PD array is something like a fair value gap, whether it be bullish or bearish. See this fair value gap right here? This is a bearish fair value gap. That's a type of PD array. See this order block? That's a bearish order block. That's a type of PD array. Vacuum blocks, propulsion blocks, breaker blocks, those are all types of PD arrays. So that's what I mean when I say a PD array. So when I see it disrespecting the bullish PD arrays, respecting the bearish PD arrays, and it's delivering from the buy stops, and now we have these relative equal lows below, well, this is clearly my draw on liquidity. So this is when I'll put a little eyeball right beneath that low, because that's where I think that price is likely to trade. This is where retail traders are going long at support, and they're going to have their stops beneath here. So smart money, if they're short, of course they're going to pull price back down and take out that lower liquidity. So that's where my focus is going to be. When price retraces back up, now I can refer to bearish PD arrays, and I could start marking out, this could be fair value gaps, order blocks, breaker blocks along the bearish order flow side. So I'm not worried about this side of the market, because now if it's targeting liquidity, well, the algorithm's not going to refer to any of the PD arrays on the buy side of the curve. So this is a market maker sell model in and of itself. If you're more experienced, you know what I'm talking about right now. When price retraces back up, I'm looking for any PD array to mark out. I can mark out the fair value gap right here. I can mark out the fair value gap right here. This should be a little bit lower. So this is a bearish fair value gap. These are both bearish fair value gaps. Now, since price is already so low, you may be thinking, well, how the heck can you get in right here? You're going to have your stop all the way up here, right? Or where's your stop loss going to be? Well, this is where we scale down to a lower time frame so we can start to frame another setup on a lower time frame. So now that we have a 15-minute draw on liquidity, which is sell side, I'm going to scale down into a 1-minute time frame, and out of this fair value gap, so these two shaded areas we just looked at were 15-minute bearish fair value gaps. When price returns up to them, this is when I'm looking for a lower time frame setup. You can see right in here, price retraces back up. This is at 950. So if you look at the 930 opening price, look what price does. As soon as that opens up, it just delivers straight higher. When you get that, and I already have a preconceived bias that we're heading lower, anything above this 930 opening price is a premium market for smart money. They're selling as price is above the 930 opening price. How do we know that they're going to stop selling above that? Once we get that confirmation model. So I can delete this one because price did not reverse in here. Here's where I'm looking for price to run internal buy stops. So we have the buy stops right here. And then I'm looking for a shift in market structure lower, which we have right here. And then I'm looking for a fair value gap nested within there. So this is a bearish 2022 model out of the 15-minute fair value gap. Where is price likely to head now? For the draw on liquidity lower. So the good part about this is I can get in when price retraces back up, put my stop above the highest fair value gaps. There's a few different places for stops depending on which risk you want to take. See how this is the highest candle where there's a fair value gap? So I could either have it above candle number 1 of that. So this is candle number 1, 2, and 3 of the fair value gap, right? Candle number 2 is where the fair value gap is going to be. I could either have my stop above candle number 1, which is up here. Could have it above candle number 2. See how there's no fair value gaps above here? Or the safest stop is going to be at the swing high. If you want to be safe and you don't want to get stopped out prematurely, just have your stop up here, right? I have my stop. I'm going to show you guys how I took this trade on Monday. I did enter in here, and I have my stop above this high of the fair value gap. These highs should not really get traded to if price is going to stay in a sell program. And then I targeted the liquidity. So I believe this was around a 1 to 2 RR trade because I got in on the lower fair value gap. So in this strategy that I use, I only require a 1 to 1.5 RR. It can be higher. It can be never less than 1 to 1.5 RR. So it could be 1 to 5 or it could be 1 to 1.5 RR. It's never going to be lower than that. So when price retraces up here, right? What is going on here? Well, we have the 15-minute engineer liquidity. Let's zoom back out to that time frame just to kind of refresh what we're looking at here. We have these relative equal lows. We talked about how that's the draw on liquidity because of what we previously talked about with bearish order flow being respected, delivering from buy stops, disrespecting bullish PD arrays over here. When price returns to a 15-minute fair value gap, you could mark out a 5-minute fair value gap. You're just looking for a lower time frame setup out of that. So I show what the lower time frame setup looks like in here. We get a shift in market structure with a fair value gap. Once we get that and it closes beneath this swing low, it's going to be best to just wait for a close beneath the swing low, because then you're not going to get caught offside as much. Really what matters is just that it closes beneath these consecutive up close candles for the change in the state of delivery. Once we get that, it's likely to target that 15-minute draw on liquidity. So even though we put in a swing low right here, I'm going to target the lower one because this is where the 15-minute is heading. So I'm going to go in and show you guys how we looked at this in the Discord beforehand. So this was the setup from yesterday morning. I posted this in my Discord beforehand. I said looking for price to come back down to the bullish breaker, then reach for the sell side. So I'll post a little text and then a chart of where I believe price is headed, and I'll share that with Discord members beforehand. So we had the fair value gaps right here. Price retraced into them and then went straight down for the sell side. So that was a nice sell setup yesterday in the AM session. If you guys are interested in joining my Discord, throughout each week I do share ideas. Here you can see on the left hand side what it looks like in the Discord. I do have a little tab on how to use the Discord server, share charts on futures, crypto, stocks, commodities, and Forex occasionally. If you guys are interested in that, check out that link below. So when we zoom out on this setup, you can see that the sell stops, they get ran, and then it was a profitable trade. You may ask, Dan, why not target the sell side down here? And we're going to touch on consolidations a little bit. I'm going to make a separate video in the future on this, but in consolidations, if you look on the S&P 500, look at this 15-minute time frame. See how it's in consolidation? When price is in consolidation, I only want to target internal range liquidity. It is going to be the easiest draw on liquidity. So most ICT traders struggle because they're always targeting external range, meaning when someone sees a setup like this, they're always waiting for the external range liquidity, right? I'm only looking for that internal range when price is trading in consolidations. So in this little diagram right here, you can see that this is a 2022 model right here where I'm circling with my mouse. This would be a long. When price takes out internal buy stops, right, that would be where the take profit would be. I'm not looking to sell all the way up at the external range. Same with right here. When price pulls above internal range liquidity and it presents a bearish setup, I'm only looking to take off at internal range liquidity, which is within this range. So just that little small swing low right in there. Same thing applies when we go long right here in this 2022 model, only targeting that internal range. From this high to this low, right, that's a range. Any high within this high to this low is considered internal range liquidity. So if we look at a real example of that, when I draw a swing low, or when I draw the fib from this swing low to this swing high, right, since we are in a consolidation, I'm only looking to target lows within that range. I'm not looking for expansion to take out both sides, right? Because what can happen is price can just create what looks to be a market structure shift. Look over here, price takes out the internal buy side, and then it just reverses straight down. So I don't know if price takes out this internal, if it's just going to reverse straight back up, which is exactly what it did, or if it's going to head straight lower. So the easiest way to be profitable in a consolidation is just targeting the internal range liquidity, which would be like this low right here, because it's within that bigger range. I'm not always looking for external range in consolidations. So now let's go over to the NASDAQ. I'm going to show you guys how to frame an intraday bias when bullish. So on the daily, I'm just marking out important highs and lows. We have this level of buy side, which price swept. We have this level of buy side up here as well. You can see how price swept that and then started to retrace back down. Now I'm looking for other levels of liquidity lower. We have this level of sell stops right here. Now, why am I not marking out the sell side down here? Well, since I'm framing intraday bias, I'm only looking for liquidity close to the market price. So on Monday, when price runs out this liquidity, right, what is price doing in here? It's just chopping around. So beneath old lows is sell stops. The next level of liquidity, if we go into an hourly time frame, is all the way down here. So we do have a pretty big range between this swing low to this swing low, where it just delivered straight higher. So when price takes out this level of sell stops, this is an area to hunt for lower time frame setups. Now, just like we talked about in this diagram right here, if we get a setup at this level of sell side, I'm not going to target this level of buy side. Why not? So I don't know when price is in consolidation, if when it takes out external range liquidity, if it's going to head for internal range, meaning it takes out just a swing low within that range, or if it's going to head all the way down to this previous low. If that didn't make sense, I'm going to explain that now. When price takes out this swing low right here, and we're in consolidation, I don't know if this is going to put in a significant swing low and take price all the way up higher to up here, right? But what I do know is if we get that setup in here, what's likely to occur is they're likely to target internal range liquidity. So when price creates this market structure shift in here after taking sell side liquidity, market structure shift occurs when price takes out this swing high. That'd be the market structure shift. We also do have this fair value gap, right? So we have liquidity ran, market structure shift with a fair value gap. I'm just going to target that first level of internal buy side. So I'm not targeting all the way up at the external, I'm targeting the internal. So if you entered here, your stop loss could be in two different places. It could be right beneath the fair value gap, candle number 2. In this situation, that gets stopped out. So the best place to have your stop is at the swing low or candle number 1 of the fair value gap. So this is candle number 1, this is candle number 2, this is candle number 3, either below candle number 1 or beneath the swing low. Again, safest spot is going to be beneath the swing low. Targeting the buy side from there, that would be about a 1 to 4 hour trade. Notice how price returns above internal highs and then displaces much lower. That's why I'm only targeting a low hanging fruit internal range buy side level. So going back to the NASDAQ, if we go to this 1 hour time frame, I'm looking to see what does price do beneath the sell stops. Do we start to reverse, and is it starting to prove to me that order flow is bullish, or does it just displace straight through it? So when price takes out this 1 hour level of sell stops, I'm going down to a 5-minute time frame, and I'm looking to see what order flow looks like. So in this price like higher, I don't see any fair value gaps. Then I'd scale down into a lower time frame here. On the 4-minute, notice how it creates a market structure shift by breaking through this swing high right here. And then also we do have a bullish fair value gap. Notice how it respects that and then starts to expand away from it. So that's important. Notice how it returns back down, respects the bullish fair value gap, wicks into it, and then expands much farther away from it and starts to expand higher. So now when I go into a 3-minute time frame here, so I'm just scaling down on the time frames, notice how price is trading higher and it disrespects this bearish fair value gap. So now what's going on? We're delivering from the sell side liquidity. It's created a market structure shift with a fair value gap. It's expanding higher and it's starting to disrespect bearish order flow. So we have a fair value gap that gets disrespected. That's a PD array. So let's scale down into a 1-minute time frame now, and you'll start to see that we do have multiple bearish PD arrays being disrespected. So I'll make these ones red so you guys can see what I'm talking about. These are bearish PD arrays. So when price takes out the sell side liquidity, I want to see which PD arrays are being respected. This is the sell side over here. Price takes it out, creates the market structure shift higher with a fair value gap. It's disrespecting a bearish fair value gap here, a bearish fair value gap here, and then expands even higher, and it's disrespecting a bearish fair value gap over here. So once we're over here, this is where I start to get long, because now we have a clear market maker buy model. Price is delivering from the 1 hour sell stops. If we go back to the higher time frame, it's delivering from the sell stops over here. On the lower time frame, it's disrespecting bearish PD arrays, and it's expanding higher. So now going back to a lower time frame, we could target internal range buy stops. And I'm going to show you guys how we did call this out in the Discord. And specifically, we're targeting the internal range buy stops because I don't know if this swing low is going to hold and take us up to here or if it's just going to take us to internal. So framing intraday bias, it's just best to target internal levels of buy side or sell stops, especially when you're in consolidation. So you can see from there, just expand straight higher, and bullish order flow continues to get respected till the end of the day. And around 350, it does take out both of those levels of buy side. So here was the long setup posted beforehand in my Discord on the NASDAQ. I said all sell side taken out on the 1 hour. That's what we just talked about. There was a 4-minute market structure shift with a fair value gap. Seeing if price can reprice back to a premium above the 0.5, then reach for the first fair value gap and a premium. So what I was saying here is that I think price is going to expand for the 50% level for the first target, the fair value gap above the 50% level for the second target, and then the buy side for the third target. So those were different levels to take profit at. I do not offer a signal service, but I strictly just suggest where I believe price is headed. Later in the day, you can see it does end up heading for the buy side. I get in after I pretty much say that I think price is going to trade higher. And then I held for that third target, which was the buy side liquidity. Took off a little bit early because market was closing. So these were the executions for that bullish setup that I just talked about. So I'm not just a hindsight ICT trader. I'm showing you guys that I could do this live as well.